Today's market call is presented by Robinhood. Robinhood's financial tools put you in control to trade, invest, and earn your way. My goodness gracious, December is flying by. It's the 3rd of December.
Really is.
You know, you say that now. It's like the NFL season. This is market call, by the way.
Correct.
1 o'clock on the East Coast.
Yeah.
In the NFL season, when week 1 hits, you wake up and the next thing you know, it's week 14.
Yeah.
Like this.
That.
And it's the same thing with December. December is one of those months that just sort of fly by. Yeah. Like you're going to wake up and be like, OMG.
We also have 2 holiday shortened weeks at the end of the month, which is kind of weird. You got a lot of people checking out. You got a lot of people coming in hungover from their holiday parties. Oh my goodness. The holiday parties start. You know how we say this all the time, that Black Friday sales and Cyber Monday sales are like literally starting after Halloween.
Yeah,
now?
It's crazy.
The holiday parties start really early. Who wants to have a Christmas party in the first week of December?
Ho, 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 and mistletoe. Remember that scene? That's Charlie Brown's Christmas.
Correct. We got
Carter Worth is coming. But listen, thank you for joining us. Hopefully none of you folks are hungover. I am not. You know why I'm not hungover?
Why? Because you didn't drink last
night. I don't drink.
You know what I had last night? I had a Peroni, which is your people. That's the beer that they make. I had a 0 alcohol Peroni. Tastes like beer. It was good.
And you're proud of that.
I don't need to drink on a Monday night, but I was out to dinner. All right. So what's on the agenda here, guys? What are we going to get through?
On December 10th.
Ooh, Tuesday.
December 10th. That's a week from today.
Yep.
This is what we're doing. Transforming the financial landscape, AI's role in revolutionizing technology and workflows. Starts at 10 a.m.
Yep.
We have some pretty cool people joining us on that 1 hour we call it webinar.
Yeah,
is that right?
Webinar. All right. So here's the deal, people. So we have a great partner in FactSet. I think you guys all know that. And so we got to know Katie Stepp. She is the CTO of FactSet. She has been there, I think, for 20 plus years. She started on the phones dealing with like help on the help desk. She's an amazing technologist. And we were down there at the FactSet Focus conference. What is that? A few months ago? I think it was like late April, early May. And we got to hear about some of the tools that they are integrating within their workflows using generative AI. We use FactSet and we're already starting to use those tools and they're really, really great. And then another one here. So this is Dmitry Shevelenko.
Nice job. Well, he's the right wing for the Red Wings.
No. See, I see what you did there, but not him. He is at a firm called Perplexity. We have had the CEO of Perplexity, Arvind Srinivas, on our podcast. Mm-hmm. I think he was on once. He's been on Fast Money a couple times. This, to me, is one of the most fascinating companies in generative AI right now. So to have these 2 folks on our webinar with us, you want to help us out, sign up for this thing right now. Go to riskversal.com. It's going to be a fascinating conversation. Guy, me, Katie, and Dimitri. So check it out. We could really use your help here. We want a big audience there. So go do that now, people.
And if you send a screenshot of your sign up, in other words,
your registration.
I don't know. I'm not sure how I would do that. I'd probably use a camera.
No, you'd basically.
And then send it to Amanda. By the way, what else do we have to say?
Oh, it's Amanda's baby's birthday.
It's Cece's birthday today.
She's number 2.
It's unbelievable.
She is the cutest little thing on the planet. So
she is adorable.
Congratulations to Cece.
Chirp, chirp,
so listen,
chirp.
Go to riskversal.com, sign up for this thing. It's going to be a great conversation. I mean, first and foremost, FactSet is a big publicly traded company. So we are trying to find use cases for generative AI for a lot of these companies who are spending on these clouds and using the models and the like. FactSet's doing it right now. And then when you think about what Perplexity is doing and what Dimitri's at the forefront of doing, they are going to be used across the spectrum of different industries. I use Perplexity every day. I'm actually not using Google so much anymore.
All right, listen, real quick, Amanda, because why not?
Yep.
Pull up a FactSet chart. It comes out FDS. Pull up
go.
like a 4 or 5 year chart. And I only mention this because, this was a stock that was going sideways since the December of 2021 after it made its all-time high. And then when they announced the AI initiative, look what this stock has done. Now, people say, well, wait a second, Guy. The S&P is at an all-time high as well. That is, in fact, true. But, FactSet is within a whisper of that prior all-time high we saw about 3 years or so ago. And I think a lot of it is people catching on to the fact that, this might be an AI story as well. And by the way, Dan, yesterday we sat down with the CEO and the founder of MoneyLion, and we had a similar conversation about the importance of AI. That will drop tomorrow on I think it's a collaboration.
OK Computer and OTT. And the thing about
I can't say collaboration like you got upset.
Collab. the thing about Moneyline, this is a fintech company, but it's also built a big marketplace for financial services companies, and they are using generative AI. So listen,
All right.
the crux of that thing, 10 a.m. Tuesday morning, is we are going to demonstrate through these big thought leaders at big companies how folks out there are using generative AI. Why is this important from an investment standpoint? A lot of the companies that you invest in, that you trade, are spending a lot of money to integrate this technology in their products and services. FactSet's already demonstrating it. Perplexity is going to tell you a little bit about how other companies are going to do
Worth the price of admission.
Correct.
All right, should we bring him in?
Yeah, Carter Braxton Worth of Worth Charting. There he is. Hey, Carter,
Wow.
you're going to be
How
on.
are you? Happy everything.
Yeah,
Thanksgiving, Christmas, Hanukkah, New Year's.
You know, yesterday, Carter, hold on for a second, because this is a compliment. Dan was saying yesterday how amazing his hair is.
I know.
I got to tell you something.
I know.
In the battle of the hair wars,
Yeah, Carter wins.
Carter wins.
It's amazing. Now, by the way, Carter, will you tell or share with our listeners, our viewers, a little fun fact about your barber? Because it's not just a barber; it's a really interesting thing. You told me this 10 years ago.
True. I almost, well, probably 2 or 3 times in the course have returned to the same barber. People think that's crazy, but you have to make an appointment, then you have to have it on your calendar, and then all of a sudden the client says, "Hey, can you come by that?" So that's out. So if I have a downtime in a train station, or I'm sitting on a corner, I will walk into any barber and get a haircut. Guess what? You tell them I take a 1/4 inch off all the way around, and how bad could it be?
Right.
And also, let's say it's terrible. Okay, it grows out.
That is sociopathic behavior.
No, it's not.
And Carter's also the
not.
guy who sits on the subway and he's actually reading the newspaper, and everyone else has their phones in their heads. Like,
I love Carter. By the way, he's sort of the Yasser Arafat of haircuts.
Okay, I don't think he loves that.
Well, no, but think about it, because that man never slept in the same bed.
True.
More than once. He had to move around. So Carter, he doesn't give
by the way,
horse's patootie.
True that. We have 3 jobs here today.
All right, let's do it.
First, we're going to go over the S&P 500, and we're going to detail a trade idea for some of you folks who are looking to hang on to your stock portfolio into year end. Things are getting a little tippy-toppy, but maybe you're thinking about using options to hedge. That's one. Carter had a great note out on the Chinese stock market, FXI, the ETF that tracks large caps there. We're going to go through the technicals on that. Guy and I want to talk a little bit about some Intel. You saw the news there. It's now about 10%, Guy, in the last 2 days. We have a way using options to kind of define your risk and play for maybe a gap fill back towards that gap down guy a few months ago. And we're going to take some questions too.
And we're going to do it all in 9 minutes.
All right, CB Dubs, give us your 411 on the S&P right here, just before we hit the charts here, like just the sort of performance. We've been talking about it, I think, for a couple weeks now. If the S&P were to close here 2 consecutive years up 23% plus, what does that mean to you? Does it mean anything to you?
Well, you know, there's something called data mining. You can find data to make any case one wants. You see it's only happened a couple times where it's back-to-back 20% plus, and people say the third year is unlikely to be up. In fact, it might be down, but certainly not up as much. But that's not analysis, right? It's just data mining and so forth. We do know that it's been a very big year. If you look at the worst performing and best performing, I mean, the single worst performing area or theme would be the Philadelphia oil and gas index, actually down on the year. The single best thing is the bank index, up some 40%. So ever thus winners and losers. And the market itself, obviously a robust year, to say the least, basically double what its historical average is in terms of return. But we can look at some charts and try to figure out the way forward together. So there's 7 identical charts, and the first here is trying to start with the bear market low, October of 2022. We know that from the peak to that low in October 20, the S&P was down 27%, the NASDAQ 100 down 37%. So a real robust bear market. And now, if one were to just simply accept this as the way to depict or analyze, appraise the situation, it would suggest a bit of upside. Let's add the 150-day moving average, or not add it. Let's toggle chart 1, chart 2, chart 1, chart 2, and let's put them together. And so the third iteration, this is the bullish scenario. Say, hey, look, we can run a bit more. We've been further above the 150-day than we are now. And one could say it's a sort of a proper hold, stay long, be long. Let's look at the closer, let's look at the next iteration. This would take into context since the low of not October 2022, but October 2023, in which the market has been also very robust. And now let's do the 150 moving average again. Now let's put them together. one would say, all right, well, even with this depiction, it would suggest that we're not at the upper band and we can inch higher, if not move higher comfortably. So then let's put them all together. And I would say, these are the reference points that one can use. So if one is anticipating a dip, a pullback, a correction, perhaps on Jan 1, with profit takers, the 150-day moving average, which is basically in line with the lower band of the pink 1-year channel, that would sort of imply a normal corrective 4 to 7% pullback. And in turn, if one's anticipating no dip, one can look towards the 6,500 level. My own hunch is that we know that January, December is seasonally strong, and January is quite often strong, and yet some of the great reversals have occurred in January where everyone walks in and says, I should book it. And a lot of profit takers emerge, and January can also be a very sort of unhappy month.
So Carter outlined the charts, and this dovetails into the first question, Dan. And this goes from Jamie, if you want to pull it up. How do you guys feel about the Shiller PE being at 38 plus? Do these things matter anymore? Okay, for you playing our home game, the Shiller index is also called the CAPE ratio, which stands for cyclically adjusted price to earnings ratio. The Shiller takes basically dividing the company's stock price over 10 years by their earnings over the last 10 years. I will tell you this because I actually looked at it the other day. You're going to be shocked to know that right now at about 39 or so, this is the highest we've been, Dan, since I want to say the fall of 1999 when it traded north of 44. And that was a historic level. And again, being at these levels now suggests we're the second highest in history. Now, with that said, you'll say, wait a second, these are not timing mechanisms. And they're not. But when you layer that, Dan, on top of what Carter just laid out with his charts, in terms of the Buffett indicator, in terms of just the normal PE, what was probably about 22.5 or so, and then you look at other factors, yeah, maybe it's not a timing mechanism, but what it suggests is the market has less and less room for error on the upside, in my opinion.
Yeah, and then you throw in the universal bullishness I think that exists here, and we've subject to it too. I mean, I can't come up with a reason why between now and January 1, why the S&P would have a meaningful sell-off, and that's usually the sort of condition where maybe you get a bit of a sell-off. So, I look at what Carter's chart suggests, and if you got to the upper end of that, uptrend there, and you get to 6,500, that's where a lot of the S&P targets are for many of the strategists. You know what I mean? So if you were to achieve that, I mean, talk about the level of bullishness that would be kind of seeping into the markets. Well, here's a way I think is kind of interesting to play that guy.
Well, I was just going to say, it tees you up for our first trade of the day. So this, again, we're looking at all these different things. Jamie's question dovetails beautifully with what we're looking at. So take it away on the trade front. By the way, look at these charts. These are the great Robinhood charts that we've been using.
Yeah, by the way, Carter's charts, fantastic content here. This is what I kind of was drawing up this morning when I was thinking about, how I would think to kind of protect a portfolio using options. And I'm looking at just kind of this breakout to new highs. Just, we check back to that uptrend. We're above those highs from a couple of weeks ago. And it just feels like, things are petering out a little bit, at least the upside momentum. So let me take over here, Amanda, if you want to share my screen. I'm going to the legend here. This is my main page. All right, let me just pull up the SPY. This is a sort of 1 month here. You can see that we're kind of leveling off a little bit. You have a VIX at 13. So let's just kind of look at the charts for 1 second here. You see that rising 150 that Carter talked about, that in the SPY, the ETF that tracks the S&P 500, that's coming in right around 560. Okay, so if we were to have a sell-off, let's just say in early January, like Carter suggests that is in the cards here, I've been looking at these sell-offs over the last, I don't know, going back to early August, we had nearly a 10% one, and then early September about a 5% one, and then when you go late October is about 3% or so. They're getting smaller and smaller. To me, something's got to give here. So let's go to the options chain for a second. I want to look at a put spread. I want to look in January expiration here. I want to look to buy when the SPY is trading about 603, the January 600 555 put spread. You can do the math on a 555 put spread. You get to about $45 here. Okay. And so I kind of wrote this up wrong here a little bit. So when I think about this, okay, I'm buying one of the Jan 600 puts. I'm paying about $7.50,
which is basically in the money ish.
Dude, it is 1.25% of
Right.
the ETF price here. You don't have to turn this into a spread. I know what Guy's going to say, but let's just say I'm looking at the 600 555 put spread. I'm selling one of the 555s at 150. It costs me $6. I have profits of up to $39 between 594 and 555 of a max gain of 39 below 555. I have losses up to $6 between 594 and 600 with a max loss above that. I look at the risk reward of this trade. Let me just build it here for a second. And I'm buying
it's like 6 to 1.
Yeah. I mean, it's just
a little more than
amazing.
6 to 1.
So right here, as I'm looking at this and I go down to the 555 and this one, I have about 100 strikes in here, people. You can just go as much as you want. And let's say I'm selling that one. So here's the order ticket right here. This 600 555 put spread that cost me $6 or ish or something like that. I just love the risk reward here, man. And so the way I think about this is like, okay, let's say the SPY goes sideways or higher. I'm going to look to cut my losses. I use a 50% premium stop here. But if this thing starts going lower, you have this right where you want it to protect your portfolio.
You're also taking advantage of the VIX being at these basically depressed levels vis-a-vis what we've seen over the last 6 months. So that's working in your favor. I should know this. What is the expiration date for these?
January 17th.
So that, you get to the middle of Jan. So I think this Carter said, you see some of the biggest reversals in the month of January. Again, it makes sense. It's all about risk reward, right? And it's not like it's a one-to-one thing. I make $1 to risk it, and that's not what you're looking at here. You're looking at making potentially 6 and you're risking 1. I think you'll do that every day, especially in the backdrop that I think we've just outlaid with the, PE rate, the CAPE ratio, the Shiller ratio, the same thing.
Sentiment.
Valuations, Carter's charts, sentiment, all those different things, Dan.
Yeah, and again, we make this point all the time. If this was a hedge against your portfolio, you're doing this tactically, right? If you were constantly buying puts or put spreads against your portfolio of stocks, then you're going to be like dragging your performance massively. So you want to think about timing right now, right? So when I think about January 17th, I do have a 2.5 weeks into the new year after what looks to be a bang up year, after a bang up year in 2023. So I like the idea of putting a little protection on. Also, January 20th is a Monday. The markets are closed. Now, obviously, this trade doesn't cover that. You could look at the following week, which is also inauguration on Monday the 20th. So for whatever that's worth, Carter, that's how I'm thinking about these things. I'm getting down to your levels, that 150-day moving average. Thoughts on the trade?
Yeah, I mean, I think this is it's the definition of prudence, right? It's acknowledging that the market can go higher, but that there's asymmetry at this point, that the prospective drawdown, we don't know that there's a drawdown coming, but the prospective drawdown, sell-off, dip, correction, decline, drop is perhaps greater than the prospective further upside before the inevitable drawdown occurs.
So wait, Guy, at what point did Carter move his office into a dentist's office?
Well, no, I mean, clearly
that guy's getting some real
when you live in New York City, in sort of the upper echelon there, that Park Avenue area that Carter finds himself.
Don't dox
a lot of
him.
I'm not. I didn't give his address out, but a lot of times there'll be construction because people will come in. They'll buy these apartments. They'll knock down walls or add some bathrooms, and I'm sure that's going on. By the way, Dear Prudence was off the White Album.
Correct. That's it wasn't really called the White Album. It was just.
Well, I mean, that's what people named it.
That's what they named it.
The White Album.
Well, by the way, so Carter's a smart enough man.
1968.
He's got a lot of kids in his household. That is his office right there. He's not hanging. He is not work from home guy, Adami.
It's some part of the building.
Yeah. All right, Carter. This was a note out on Worth charting yesterday. We were kind of dying to get to this one because you had a really nice call on this. And, Guy and I were pretty skeptical after some of that early stimulus out of China. That was right after Labor Day or so. And we've talked about it a little bit. We detailed the trade idea in Alibaba last week. That was kind of our proxy for trading a Chinese consumer. It was obviously a bit contrarian. Talk to us about this because you were bullish and then bearish, and now you want to do something again on this thing. So walk us through how you're thinking about the large cap Chinese stocks, FXI.
So the October 7th note was just marveling at this epic steep move off the 150 moving average. And in fact, a long-term chart was published, all data showing that the FXI had never been higher above the 150-day. And also inflows to the FXI, it blew out all records. So it's an instance where something can be just a crescendo, a peak, that max love. And indeed, that's what happened. We know that from that, perchance, that October 7th peak, the day of the note to sell, we have checked back almost precisely to the 150-day moving average. And we might have a chart of the updated FXI. But what we know is that we can toggle the two. Basically, we've steep and uncorrected, and now the note Monday yesterday was to do some buying, right? So that whereas on the first week in October, the judgment to sell, we think now is the time to buy. And Baba's great here, to my eye, Baba, but also Tencent, and you could use the KWEB, but it's a fairly mature intermediate decline to a level of support.
Yep, and this is one we talked about vis-a-vis Alibaba, which actually is working out. I think Alibaba was 82 or so when we talked about putting on a long position there. I think it's trading 86.5, and the FXI has done what it needed to do. I would have loved, I think Carter would as well, for it to trade down to that moving average and fill that final gap. But you know what? I think it's done enough where you can start to look for this on the long side, and we talked about it with Alibaba as well. I don't think the China trade is over. My sense is you're going to be hearing something from them in the next couple of weeks in terms of another round of whatever you want to call it, stimulus, capital injection, market support,
in the year end,
before year end, absolutely. And I think that's going to sort of get the next leg. Now, look, I don't know if the FXI is going to get to levels we saw back in September, but if you just got a 50% retracement off this move that we've seen on the downdraft, that's a pretty significant trade.
Yeah, really quickly, Carter. So you see that bounce that we had a couple months ago off of that 150-day moving average. So it served as support. You had that parabolic move. You check back to that high from, I think it was like May or so. Would the 150, if you're looking at this, you say, all right, I see the trend line, you know what I mean, from the lows earlier this year, like very early this year, that probably lines up with that 150. And so might you have a little bit more room to the downside? I'm just saying, like, when you talk about prudence, might you kind of wait a little bit, or is this the time to kind of start sticking your toe in the water?
Yeah, I mean, it's nibbling, right? It's starting. You can't look at, precise entry points are very hard to find. And the gap, remember, this is a very gappy thing because it lurches open post, Hang Seng. And so it's filled with gaps. Gaps are less important, and the Hang Seng doesn't have a gap. And that's really what this is mirrored to. So it's just a question of whether this flag, this pennant, you can call it whatever, this pullback, is reached a point in terms of duration magnitude, about 20%, where selling is likely to abate. And that's the judgment. Now, from there, we're in the lap of the gods. We shall see. It can go all the way to the 150-day. The trend line from the low of January of 2024 is lower. It comes into play around 28, and here we are 30. So that's a full, 8+% lower. One could enter here and then take an 8% hit. Some might argue that China's doomed and it's going to make new lows and go to 19. Again, wouldn't have published it in October 7th if I didn't think it was extended. And I wouldn't have published today if I didn't think it's a pretty good buy point.
We got you. These are the sorts of questions we get in the chat. So guys, keep throwing the questions in the chat. Carter Braxton Worth, we really appreciate you being here. We hope you'll come back on Thursday.
Good luck. I hope the drilling works out. It's like mining for
mining
ore
for
or something.
I mean, like whoever, that root canal is going to hurt. Really quickly,
do you know who Dear Prudence was written about? Who was married to Frank Sinatra for a brief period of time?
I know. Give me 1 second.
I believe she was married to Frank Sinatra.
Oh, he was married to like 5
Well,
people.
yeah, he was.
Just give it to me. I don't
Mia Farrow.
Okay.
You know this.
Yeah. Well, and a lot of people think Ronan Farrow.
Oh, it's 100%.
Is
not a lot of people think.
Not Woody
Frank
Allen.
Sinatra would think that if he was still alive.
Yeah, Ronan Farrow has these beautiful blue eyes.
Let's just put. I mean, come on.
Really
let's just call.
I'm just
that
saying.
is Frank Sinatra's son. Mia Farrow had a sister, Prudence Farrow.
Okay.
Yeah. No, I'm not making this up.
So that was written by John Lennon.
Right? I think it might have been George Harrison.
Oh, really? There's this goofiness. Supposedly, once John Lennon obviously deceased, was 1981. He was
at the Dakota in front of his apartment,
Upper West Side. Supposedly, like Paul McCartney changed the order of a bunch of the writing credits.
Why you got to do that?
I'm saying that happened. Possibly.
By the way, if you really want to go down this road,
but go ahead.
John Lennon was a brilliant songwriter.
Correct.
I don't think he was a brilliant musician.
He's not even your top.
No, he's number
3.
3.
Oh, he's there.
Yeah, I think
George Harrison.
No, you know what? I put McCartney back on number 1.
Okay.
Having seen that Roy Jackson thing or Peter
Ringo.
Jackson thing.
Yeah.
So McCartney's 1. George Harrison, brilliant musician.
Yeah.
2. Lennon 3. Ringo 4.
What did Pete Best go on to do? Anything?
Nothing. He's the 5th Beatle.
Yeah. He
Which is
probably makes a
unfortunate.
little residuals there. Hey, really
I don't
quickly,
even know if he's
Amanda,
still alive.
let me drive for a second here. I want to go. I want to go
the Robinhood app.
Yeah, I want to go back to the legend. I want to be a legend on the legend here. So we're just talking about the FXI. I just want to go to the. Whoop, there we are. Let me go to the chart, and I think Guy, you and I, you can look at charts lots of different ways, right? Like, and Carter's work is fantastic, and we obviously, put a lot of credence into what he does. When I look at this on a shorter term time frame, Guy, like I really like that little V reversal that's happening right 100%. There. You see that? Like,
look, we basically traded down to that prior high. So put your cursor down, and you see it go up a little right there. So we basically got to there. It would have been beautiful. It lined up the moving average. It did not. But you filled some gaps on the downside. By the way, we're not doing this after the fact, ex posteriori. We're doing this a priori.
Look what I just did there.
Meaning that, we talked about this in September. We said, especially on that huge volume day, we said that felt like buyer's capitulation. We were probably going to back and fill some gaps. That's what's happened. So you got to look, and I've said this for a while, you're looking for an entry point again. And I think you're going to find it here. So I absolutely like what's going on in this.
Well, that's why I asked the question. If you just see so you see that 150-day,
that would have been
that
uptrend
that I just drew there. I just want to go now to the options change again for a second here. So this ETF is trading about 30.62. I'm going to go to February expiration for a second here. Let me just go down. So you see this in the middle that shows you where the stock is trading, or in this case, an ETF. And then I can quickly go down and I can look at the strike, the money strike. So the 31 call in February, Guy, is offered at 139. You probably put a mid-market, you probably get hit. I don't know, 136, 137 or something like that. So if I look at this and I say to myself, okay, if I pay, let's call it 139 right here. I take the strike of 31. I add the premium of 139. My break even is at 32.39. That's up a little more than 6% or so. I do have 2.5 months between now and then. If you think about, let me just go back to the chart for a second here. You think about that parabolic move. Let me just kind of extend this a little bit that we had. I mean, look at that. Look at that move off of that. You know what I mean? So it went from,
we used to call that a line job.
Yeah. 25.5 Guy up to 37.5
yes,
in a week and a half.
I know this.
All right, so we're going to come back. We're going to, maybe next week, we'll update the BABA. We'll take another look at the FXI. One of the things that we do when we're trading these sorts of things, with options, you got to get the timing right. So it's, there's a lot of things. You got to get the direction. You got to get the magnitude of the move, and you got to get the timing right. So we don't always just kind of get right in there right away. We like to kind of price things out, see what they look like, and then take another look sometimes.
So before we get to our Intel trade,
you got a question?
Sure we do.
We got a few questions.
This is from Jamie again. Jamie, I don't know if Jamie's a man or woman. I'm not being a wise guy. Could be either.
How's it spelled?
J-A-M-I-E.
Some women spell it J-A-I-N-E.
Yeah, sure.
So that's one.
Listen.
Yeah, I'm just.
But
saying.
Like Jamie's
crying.
Jamie Lee Curtis.
You are a Van Halen fan.
I love Van Halen.
Do you like that song?
Yeah,
a little whiny.
No, it's not.
See what I did there?
No, yes. Van Halen, the first 5 out. I think it was I think they did 5 maybe 6 studio albums with David Lee Roth, and then the other guy came in and effed it up. Is anyone paying attention to the delinquency rate in CMBS? I think you guys need to talk about it. It's literally soaring.
Who asked that question?
Jamie.
Somebody sent me. Oh, Jamie. Somebody sent me a link to that they're basically the
highest we've seen since 2013 at 10.4. So the answer is, I've been looking at it every freaking day.
Yeah.
It's the highest we've seen in 11 years. Nobody seems to care. So Jamie, thank you. I don't know if we can put it in the show. I don't even know how to do that. But yes, I'm looking.
Well, so
I'm looking at a lot of things. I mean, credit card delinquency rates are the highest we've seen, I think, in 11 years as well. Nobody cares.
One of the things that I read in the story, I don't know which one we're going to put in the show notes, but that there's this whole move towards conversions of business, of offices into residential. And we know that we have this residential crisis, but with rates where they are and everything, it's becoming increasingly difficult. So good question there. All right. So the news of the day yesterday, and we talked a little bit about it on Market Call, I think. So Intel CEO Pat Gelsinger brought in early 21 to kind of, just listen, the company was doing shitty back then.
Oh.
Okay. I'm just saying.
No,
so
yes, it's
think
true.
about it. So, he's pushed out. Look at that little uptrend that we have there. It's pushed out. You see that 150. That is the resistance right there. Man, to tighten that up for 1 second, or I can show it if you want to let me drive. It just broke.
It's like when you take your road test.
Yeah.
The guy sits next, maybe mostly a guy.
Yeah.
And sometimes like they have to use their brake.
Yeah.
Because you suck.
So by the way, so my daughters are 19 and 21.
Yeah.
We live here in New York City.
Yeah.
They grew up here.
They failed their road test?
No, they don't. They've never taken it. They've just gotten their permits.
I was driving when I was, and I'm not trying to be a big shot. I was 12 years old.
Yeah.
13.
So the interesting thing is, like, I feel like every time I get in the car with them, I'm like
taking your life
in my hands. I'd much rather have some civil servant. You know what I mean? Who's
no, I mean, but that's true generally speaking.
Yeah.
I mean, some of the people out there, they shouldn't be allowed to drive anything.
Yeah. I love these charts. I could just use my
okay. Anyway, please continue.
So you look at what's going on here. We just broke that uptrend. It's a big volume couple days. We're gonna have a big volume day today, guy.
We are.
So a lot of folks who've been long this thing, waiting for a turnaround, waiting for maybe some M&A, waiting for whatever, they're kind of peeling out of this thing. And so last night in Fast Money, we were talking about it a little bit, and I was like, I can't make a strong case for it. Not on valuation.
No, I know.
Not on
on anything.
You took the opposite side though. So
yeah.
walk me through what you're thinking, and then I think I have an options trade that can kind of reflect some of the things that you're thinking.
Well, I mean, to me, you mentioned volume. So we saw the volume. Well, obviously, if you go back and look at that line job to the downside, and when did that take place? I want to say in like June or something, July.
Yeah, no, it was July. It was Q3.
Yeah. Okay.
Q2
so
earnings, Q2 earnings.
I mean, that was everybody's saying enough already, right? So that was your major capitulation. Now you're having a couple volume days in a row. I think we've already traded 80-something million shares today. It typically trades about 70. So one has to agree that every bit of bad news is pretty much, you would think, in the name at this point. My point was this. There are some things to sort of like about the Homeland Security play is one of them. The potential for M&A is another one of them. If they can sort of move the needle on some margins, that's another, because margins have been a disaster. And think about this. During Gelsinger's reign, the stock is down over 60%. Think about what the broader market has done over that period of time, and think of what semiconductors have done over that time. So if you get any incremental good news, I mean, this goes from a $22 stock to a $29 stock, and nothing has changed other than maybe some positive sentiment. That's sort of where I'm going with
this. I mean, I think once you get some of this near-term selling out of the way, I mean, some folks, they might have been buying this thing in the high teens, right? Yeah. And playing for the sort of thing that you're talking about. With him out, I think what it does is it possibly pushes out some M&A, just because if you don't have somebody at the helm, interim CEOs are not likely to be the ones, unless it's really board-led, to kind of entertain some takeover offers or merger offers, but maybe. Okay, so here's the way I'm thinking about this guy. And again, I can see how you're thinking about it. Like, might this thing go back to the high teens if there's not a whole heck of a lot of good news as we get into January? I think it's going to be, I don't know what the date is. Maybe we can find it really quickly when they report, Q4 earnings. I can't imagine they're good. And if you're the interim CEO, you're not going to want to put your, kind of stick your neck out there and offer any sort of guidance that you don't think that you guys or that they can hit. So I'm looking at the date. Okay. So 124, that's when they report, January 24th. Maybe it goes back to the teens. Maybe they give some conservative guidance. I certainly would. It's not your neck on the line here. You know what I mean? As far as
look,
turnaround,
100%.
As far as a turnaround. Okay. So let's just say you agree with Guy, and let's just say there's a potential for M&A. Okay. Then I might look to a call spread. I might look out to February expiration. So you have the stock trading around 22.5 or so. Let me drive again. Let me go to the legend. Let me be legend here, mate. And I'm looking at this thing. All right. Let's go to the options chain. Let's look out to February expiration. I'm already there. You can see it's trading about 22.53 where my cursor is, right? So let's say I want to look at the 24 call. Let's say that cost me 175 or so. And I want to look up to the 34 strike. So a $10 wide, it's trading at 22.5. I'm buying 124. I'm selling one of the 34. So I have the 24-34 call spread. I'm paying about $1.50 for that. That breaks even. Okay. The long strike, 24 plus the premium, 1.5. You could do the math there, Guy. It's 25.5, right? I can make up to $8.50 between 25.5 and 34. Max gain above that. And then I'm risking 1.5%, right? So if I do the math, it's about 6.5% of the stock price. I break even up about 13%. But here's the deal. This is the only sort of trade that would make sense if you really thought there was a potential for some sort of M&A sort of rumors. If that is the case, this stock's going to get back above. Let's just go back to the charters for a second here. This stock was trading. Okay, where was it trading, guy? It was trading $26 just about 2 weeks ago or something like that. So the options market, if I look at the premium that I paid plus the strike, I can look at the delta there. So 25.5 is basically saying that there's a 35% probability right now that this trade is break even. I like the risk reward there. And once the selling's done, I think you probably have a pop back towards 24, guy. So I like the risk reward of this trade. And if you were ever to get this thing right and get it back above 30, the risk versus the potential reward looks pretty good.
Yeah, you got to listen. You're not saying their business. When we outline these trades, I mean, rarely do we say their business is fixed or on the downside, their business is broken. What we're trying to say is, the stock is providing you with opportunities at these levels on the long side or these levels on the short side. So, that's what we're trying to do here with Intel. I do think it's sort of interesting. So we'll see how it plays out. But this, the Robinhood platform is wonderful. You've really enjoyed sort of navigating it.
Well, it's pretty
double
easy.
fisting there, by the way.
Yeah, I mean, one of the things I'll just mention is that I as you did, we worked on institutional desks for a long time. We use different trading systems, and what I noticed, especially was it related to options, they were getting more and more complicated. Okay, and then there was a lot of kind of brokerage firms. They were trying to replicate that. They thought that the more complicated it was, you know what I mean? Like the cooler it was, and then the more folks you can attract. I think it went the opposite way. I think so. Well, I like the simplicity of this platform, and over the last month or so since they launched it. Actually, it's only been out since we were down at the Investor Summit. I think that was mid to late October. So I've been tooling around with it. This is going to be something that I enjoy playing with because I like the charts and I like the ease of construction.
Do you know where Vince Lombardi went to college? It's not a trick question. You may in the area, actually.
And did he go to Marquette?
No, in the area.
Oh,
in
around
the area.
here, Fordham
University.
I knew that.
Did Amanda just tell you?
No, I honestly I did know that.
He was one of the 7 blocks of granite.
Yeah.
He went on to be a coach with the New York Football Giants.
Really, head coach?
No,
assistant.
Tom Landry was on that staff as well. Think about that.
The Cowboys.
Sure, he did.
Yeah.
And then Vince Lombardi went.
It's kind of like that tree of Parcells.
Sure, it is
in a way.
Giants, the Giants had 2 of the great head coaches of all time on their staff. They let them both go.
Tom Coughlin?
No. Tom Landry and Vince Lombardi. You're saying, okay, there's a reason why you're mentioning this.
There's a reason why you're mentioning this.
Because Vince Lombardi went to coach the Packers of Green Bay. How many plays do you think that football team had? 10. Maybe 6, 7, maybe 10.
Yeah.
Not a big playbook.
Yeah.
They did the same play over, and simplicity won championships.
Oh, I see what you did there.
So sometimes being complicated.
Defense wins championships.
Well, in that case, their defense was good, but their offense just bludgeoned people.
Yeah.
And they ran the same play over and over and over again. He could spend hours at the chalkboard explaining the different roles that each player had on those power sweeps that they would run.
Yeah.
Okay. You don't care.
No, I do.
But that is my point. Sometimes
fan.
you're looking at a simplistic, it's not simplistic.
So tying it all back. You're doing the weave again.
What?
You're doing the weave. You were doing the weave yesterday. It's like President-elect. He does the weave. He would go up there and he would talk like aimlessly, and then he'd bring it all back together. And he thought it was a brilliant form of communication. He called it the weave.
So you're comparing me?
No. All right.
No, what I am able to do.
Can we
it
do
in
one more
artful,
question? Because we do
I have
to
a
get
question
out of here.
right
Let's
here.
do it.
I don't know if this makes sense or not. I don't know if this is a fugazi question because I don't know what any of these things mean. I'm hoping you do. This is from Ronald Turner. I really appreciate your efforts. I have a quick question. I have a SafePal wallet. Do you know what this is?
Well, it's probably a crypto
with
thing.
USDT, and I have the seed phase.
No.
How should I go about transferring the Binance? Are you effing kidding me?
Well, first of all, Binance,
I mean, is this like a code?
Binance, I don't think you can use in the U.S. anymore.
I mean,
it went away. By the way, if you guys are interested in the crypto, we have a really interesting pod that's going to drop. When's that pod going to drop?
We're talking to Michael Saylor tomorrow morning.
CEO of MicroStrategy. This has to be easily one of the most interesting stocks in the entire stock market.
100%.
Like, I think it's as fascinating as NVIDIA. We all know why NVIDIA has gone up. A lot of folks are scratching their heads saying, wait, if MicroStrategy is just issuing debt and equity to buy Bitcoin, and this is an operating business, Like, why is it an equity? Why, you
It's
know
like,
what I mean?
why
Like,
is it a 5x levered, basically?
well, that's what it looks like.
Yeah.
It's a, you know, like you have those levered
But anyway,
ETFs.
so Michael Saylor's a friend of ours. We reached out to him, and he said, I'll absolutely make time for you guys. Tomorrow, we're going to talk to him. It'll drop, I believe, on Thursday, but maybe Amanda has done it.
Amanda will come in.
Oh, Bill Hockman is giving me the thumbs up.
Okay.
So you should definitely check that out.
By the way, you've interviewed him at some conferences on stage.
This would be the fifth or sixth time.
He's been on our pod going back to like 2020 or 2021.
Yeah, when people really didn't know who the guy was. We did.
You say whatever you want about the guy. Okay. He's run this company for a long time. He is one of the most committed people I have ever seen to a belief on something. I mean that. Like, think about it. They own, like, I think 400,000 Bitcoins. Is that right? Or 350?
Over 400,000 now on their balance sheet.
This is a risk asset.
They just announced another one today.
Yeah, I mean, so the Bitcoin right now is 95,000.
Yeah.
I think their average is like below 60.
I want to say it's in the high four, but whatever. We'll talk to Michael about it.
We'll get to the bottom of it. Tomorrow.
Do you want to do one more question?
Yeah, drops on Thursday. Can't wait for that.
Thursday. This is a good one, I think. This is Dan's 5. Oh, wait. What do you like about MicroStrategies? How do you compare it to NVIDIA? Timmy Adami, that's from Greg C. We'll talk about that tomorrow. We'll talk to a Michael about it. We'll address it tomorrow. This is a good one, Dan, for you. What do you think about Pfizer?
Ooh.
Tim's Pfizer.
That's
Tim Seymour's Pfizer.
You know, last night on Fast Money, we had Dr. Gottlieb on.
Scott Gottlieb.
Dr. Scott. He used to run the FDA. He's on the board of Pfizer. He's also an investor at NEA, which is one of the most successful VC companies. You know, when you have a guy like Scott, and he's been on the board for a long time here, like, you got some smart people there. For some reason, guy, they cannot get their product portfolio correct. You know the space really well. I look at this thing and I say it's a cheap stock. There was some enthusiasm, if you want to go back to, let's say, late spring, about some of the trials they were having for GLP-1. These are these obesity drugs with an oral, right? This is going to be kind of like the holy grail once you can get away from some of these once-a-week shots and the like, and you can just take a pill, whether it's daily, that sort of thing. So they were working on that. Maybe Amanda can push that out a little bit, and we'll look at a longer term.
Well,
chart.
I mean, I'll tell you right now, I think it made its all-time high in December of 2021. I think it was trading north of $60. Maybe I'm off by a buck or so.
COVID vaccine.
Yeah. And now you look at it now, and it's been, look, you can say valuation. The problem is if you have no pipeline, valuations don't really necessarily matter. The only thing I can tell you is we just recently traded down to the levels that we saw in the spring of this year-ish, 25, give or take. And we just traded down there and seemingly bounced. So if you're looking to play it for a bounce, yeah, I get it, but it's not all that compelling right now. And when the investment dollars are going to other big cap pharma and biotech names, like Gilead's had a run, obviously Eli Lilly sold off, but that's back on its horse. Merck has sold off as well. That seemingly is finding some support around 98. Pfizer's just going to be left sort of on the back in the woodshed, and nobody really cares right now.
Are you one of these guys who prescribes or subscribes?
I'm not a doctor.
No, but you know what? I had Pfizer on the brain. That's why I said prescribe.
No, but I don't.
Do you subscribe?
I just actually got my meds this morning. I had to go get blood work done.
You barely go to the doctor.
Because I got a thyroid thing.
Okay.
So I'm not looking to die of thyroid cancer unless I can.
Thank goodness.
So, but they wouldn't refill my prescription unless I went for I had to go for a whatever update, and I had to get blood work. So I go in and get the blood work done. I get a kick out of that because you know what happens? This is what I do.
That's why you like it.
What do they call them? Phlebotomists, right?
I don't know.
Yeah, the people that take the blood.
That's what.
So this is what I always do this. I think it's funny. Nobody else seems to think it's funny. Like they'll put the needle in and they're taking blood for about 5 seconds, and then I'll go exactly.
Can I tell you
something?
something?
The shit out of
Earlier this year, my doctor was a nurse practitioner, was taking my blood, and they hit a nerve. And I actually did do that. It hurt for a month. For a month, it throbbed. Really quickly, do you subscribe?
Yeah.
Subscribe to the Dogs of the Dow theory. And let's be really.
That's a Danny Moses thing.
No, but like, so there's a lot.
So they're
going to
start hearing about it now. At the end of the year,
some of the worst performing stocks.
No, it's not in the Dow anymore.
And so I was also going to mention, I think Pfizer used to be in the Dow.
Yeah, probably.
So Amgen's in there right now. It doesn't have to be the Dow. It could be the S&P 500.
No, but that's what they call it, Dogs of the Dow.
It's a strategy. We actually had a question from a listener, and we're going to do a mailbag for the On the Tape, and we'll probably do
like Santa's bag.
Yeah, we'll mailbag at the end of because you and I are going to take a little time off. Doesn't our team and us deserve
I
a
think
little time
everybody
off.
deserves a little. I mean, everybody.
So we're going to
nobody
do
can
some
go-
mailbags. We're going to answer some questions, but we had a reader, our listener, hit us and say, "What do you think of some turnaround stories?" So we're going to hit a
well,
bunch of
that's
those.
a good question.
Yeah.
I'm looking for the. I don't even. I could probably name the 30 of them, right?
Yeah.
I could probably name 10.
You want me to tell you?
Okay, go
Really?
ahead.
Well, there's been changes, like the fact
No,
that
I
like,
know
a
they keep
Salesforce
because
is in there.
when stocks suck, they take
All right, you
them
ready?
out.
So this is a price weighted. So the higher your dollar value of your stock price, the higher the weight is. Like for instance, United Healthcare guy, what's that trading at?
Yeah, it's
$8.3% of
$600 stock.
Goldman Sachs is also what, a $400 stock?
$600 stock.
Oh, also 8.25. Microsoft, which is
Mr.
obviously
Softy, $400 stock.
okay. So you see that's 6%. So all right, just really quickly,
Cisco is still a Dow
those are the
stock.
top three:
That's
Home
gonna get
Depot,
bounced.
Caterpillar, Sherman Williams. I didn't know that
That's
one.
now.
Salesforce, Visa,
3M. That's going to get bounced.
American Express.
No, I'm just telling you.
McDonald's, Amgen,
I'm sure Disney's
Travelers,
on the precipice
JP Morgan,
of getting
Apple. So this is fascinating. Apple, which is like the
Verizon.
I know the number one market cap company in the world, that and Nvidia, they keep trading spots here. That is the 14th weighted stock in the Dow. It just tells you what a useless index it is. Honeywell, IBM,
Coca-Cola,
Amazon, Procter, Chevron, Boeing, Johnson & Johnson. We just call that Johnny John.
Yeah.
Nvidia.
We know a lot of
All right, so here's a
Johnsons.
great example. Nvidia is up 180% on the year, and it is the 22nd weighted stock in the Dow. Why? It split, what, 10-for-1 earlier this year or something like that?
So you lose your mojo.
It would have been the number one. That's just so stupid. 3M, Disney, Merck trades like, you know what?
Shit.
Walmart, Nike trades like, you know what?
Ass.
Okay. Cisco, Verizon.
You know what else trade? So Bill Hockman, we love everybody that works with us. We all work together.
Yeah.
So Bill's a Devils fan. And Bill could have really rode my ass last night by the middle of the second period. Like he could have been texting me and say, your Rangers suck. But he didn't do it because he's a gentleman. So I beat him. I didn't beat him to the punch. I sent him a text this morning like, I know. Rangers are playing as poor a hockey right now as I've seen in a long time. Now, the good news is it's December.
Yeah.
Bad news is, you got to start winning friggin' hockey games.
Yeah, they went to the Eastern Conference Finals.
Yeah, they
Game
did.
7.
They won the President's. Not that that means anything, but they won. That was the best record in the regular season.
We should get out of here because we have a great
put up
podcast
the
coming.
put up the
webinar.
Webinar.
Listen, you ask all the time, people. What can you do for us?
This is what you can do.
Go subscribe. Come to this this webinar Tuesday morning, 10 a.m. Take a screenshot of your registration. Send it to contact@riskreversal.com. Amanda, Timmy, they're going to send you some swag. So we want a lot of people there because we're really, really stoked about the two folks that we have joining us for the webinar, and we think it's going to be an enlightening conversation.
Agreed. Maybe they'll send like a lock of Carter's hair. That's that weird.
I feel like you came at my hair, but whatever.
I just said Carter's hair.
All right, guy. Thanks a lot to everyone for being here.
Oh.
Thanks to our team. Thanks to Robin Hood. You're a legend, mate. We got to get out of here, guy.
See you tomorrow.
Thanks.